Hey there and welcome back to the channel. This past week, the Toronto Regional Real Estate Board released its monthly Market Watch report outlining everything that happened in Greater Toronto Area real estate this past February. And today we're going to break down all of those numbers. First, to look at an assortment of some of the headlines. In Bloomberg, we have Toronto home prices increase for the first time in 7 months. CTV News reports that Toronto home sales are up in February as consumers eye rate cuts. The Globe and Mail says that home sales drop, but prices rise for the first time in the last 7 months. And then we have BlogTO, my favorite of all. Toronto's housing market is suddenly surging upwards, and that includes prices. For those unfamiliar with the TRREB Market Watch, here's what the front page looks like. We had a little blurb from the TRREB president and the chief market analyst speaks, as well as TRREB CEO, John DeMichele. But today in this video, we're going to focus on the numbers in this bottom right corner, our year-over-year summary, and kind of dive a little deeper into these 2024 numbers from February. And the information in this video is going to follow the order of the numbers on this year-over-year summary, starting with sales, and we will wrap up with property days on market. So as we saw, sales are up 17.9% from February of 2023. This is every single February going back to 2008. They came in at 5,607 sales. The average number of sales you'd expect to see in a February, that's 6,504. So we're about 900 sales shy of the average. If we take out 2021 and 2022, pretty big outlier years, as you can tell from the graph, we end up at 6,042 sales. And this 2024 total is still about 400 short. So relative to past Februarys, we're back at around 2013, 2014 levels, but how have things trended really from month to month compared to previous years? And this chart covers that month to month. So the red line is percent change, black bars are actual change from January to February in every year going back to 2008. And we can see that in 2024, the jump in sales from January to February actually ranks 5th smallest, just ahead of 2019, 2018, 2013, and 2008. And from a percentage change, it's actually the 4th smallest, just behind 2019, 2018, and 2008. So to quote BlogTO, with the market surging, yes, it's surged kind of relative to what we saw in January, but relative to the jumps we'd usually see from a January to a February, it didn't surge. And that's highlighted here in the seasonally adjusted chart that TRREB puts out, comparing January 2024 to February 2024 seasonally adjusted. We're actually down 12% when you compare things month over month. So that's our dive into the sales numbers. Let's jump over to new listings that we can see we're up 33.5% from last February. And we'll run through some similar charts here. This is new listings in February's on an annual basis going back to 2008. You can see 2024 numbers are right around that average if we include 2021 and 2022, which were very, very busy outlier years. If we remove those 2 years, we are, 1,500 new listings more than we'd expect to see in a February compared to the long-term average going back to 2008. So when comparing February 2024 to every February going back to 2008, it ranks 6th in terms of new listings. Those new listing numbers being above average relative to other Februarys. It's also reflected in the percent change that we saw from January to February. Again, if we throw out 2021 and 2022, which don't we wish we all could, you would see that this is the biggest jump from an actual and percentage change in new listings from January to February. Back to that BlogTO surge comment. From my seat, it looks like the surge was in new listings more so than it was in the sales numbers. And that's kind of all confirmed with our sales as a percentage of new listings. This is the number that's used to gauge whether we're in a buyer's or a seller's market. And typically anything below 40% is a buyer's market and above 60% is a seller's market. If you fall in that band, you're considered a balanced market by the definition. The 49.2% sales as a percentage of new listings that we saw in 2024 is the 3rd lowest total that we've seen. So it's one of the more buyer-friendly Februarys we've seen in a while. 2018 was a little bit lower at 49.1%, and 2009 was the lowest that we've seen going back to 2008 at 39.5%. You can see it's well below the 57.4% average. That wraps things up on the sales and new listings front. Let's see what happened with active listings, which you can see are up 15.1% from the same month last year. Not only is the 11,100 active listings at month's end higher than what we saw in 2023, it's actually the most active listings that we have seen at the end of February since 2019, although it's still shy of the long-term average that we see going back to 2008 of 12,600. The jump in active listings from the end of January to the end of February was also relatively muted compared to what we've seen in history, although it was a much greater jump than we saw in 2023. I'll highlight that a little better with this chart using data from the MLS, where we can see inventory was relatively flat all the way up until May of last year, Whereas this year in February, we did see a bit more of a jump in February. This little bit of a flattening out has to do with a phenomenon that we see at the end of every month. And that phenomenon is terminations and expiries. The majority of listing agreements have expiry dates set for the end of the month. So you will see a spike in terminations and expiries at the end of any given month. And that's a big reason for this flattening out that we saw. If we pull further back on this active listings number, you can see the little bump that we saw from January to February. You can see the peak that we were at last October and November before the big fall off. You can also see that the peaks have been slowly increasing and are still kind of well below what we saw historically pre-2016. So is this a sign to you that we will see higher active inventory at the peak of 2024 than we have seen in years past? Let me know in the comments below. Coming down the home stretch now, we will focus our attention on average prices, which are up 1.1% from February of 2023. And I want to focus on the month-to-month change from January to February. We saw an 8% jump from the average sale price in January 2024 to February of 2024. That's the biggest jump that we've seen since 2021. 2020 was a little higher, nowhere near what we saw in 2017 with that massive run-up, but it is just over the average jump we'd expect to see at this time of year. The caveat here, of course, is that February is a relatively low volume month, so the volatility in that jump can swing quite wildly. You can see that we've seen jumps as low as 2.2% to jumps as high as 14%. It's also been well documented that property types that are selling, i.e. more detached homes in the spring market, usually do drive prices up. So it wouldn't surprise me to see prices increase as a result of even just exclusively property type and where people are buying through the spring market, peaking in May like we usually do see. I'm going to skip over listing days on market because I feel like this number can be a little bit too manipulated by canceling and relisting properties. And we'll jump right down to the property days on market, which are up 12.1% from last year. And here's what the property days on market trend looks like going back to when they first started collecting this data or monitoring it on TRREB back in April of 2019. January of 2024, this is actually 54 days on market for a property to sell, was the highest number recorded in the time that they've been tracking this number. Big fall off into February, but a similar pattern to what we saw with active inventory, where the peaks in any given year are increasing. I don't know that we'll see a kind of higher peak than what we saw in January of 2024, but we may see a higher bottom as kind of this bottom, the low point for property days on market, has also been increasing. I hope that breakdown has given you a little bit more context into the numbers that TRREB reported in their market watch. If you enjoy videos like this one, diving into the data, click the like button and subscribe to the channel. I do something like this every single week. Thanks so much for sticking with me through another video. Until we speak again next time, please stay safe and cheers.